Hey, friends, you are listening or watching the Dr. Sev Talks Money podcast and YouTube show. So, today I want to talk about the new announcement that was just made this past week about the new credit scores FICO 10T and Vantage 4. The Federal Housing Finance Agency announced that Fannie Mae and Freddie Mac will be using the new credit scores, FICO 10T and Vantage 4. And if you think about it, the financial landscape has changed significantly from when the classic FICO was created. And these scores are more representative of how we navigate today's financial landscape. So I want to talk a little bit about the impact that this decision will potentially have on the home buying process and potentially opening the way for the underserved to have access to mortgages. Before I go forward, I want to go backwards. So if you think about in years past, creditors, were maybe the shop owner, the landowner, and they would loan money to people in their communities. If they liked you, they may give you a good rate. If they didn't like you, you either didn't get a loan or you got a ridiculous rate for your loan. So the practice was very subjective and discriminatory, especially against minorities and women. In 1912, credit managers formed an association to standardize credit reporting. That association was called Equifax. Subsequently, Equifax joined with TransUnion and Experian to create a more objective automated system for credit reporting. And in doing that, they hired what is a company that is now known as FICO, Fair Isaac Corporation, to develop this system. And in 1989, FICO, Fair Isaac Corporation, developed what was called the Beacon Score. And you could probably remember that, the Beacon Score. Then in 1995, Freddie Mac and Fannie Mae, the federally backed mortgage companies, decided that lenders should use the FICO scores on mortgage application because it was a little bit more objective in granting mortgages. And if you think about it, Fannie Mae and Freddie Mac guarantee or underwrite most of the mortgages that are issued in the United States. So it makes sense that the FICO score became much more commonplace. So with this announcement and the Federal Housing Finance Agency, I'll just say the feds for short going forward, announcing that Fannie Mae and Freddie Mac will use these new credit scores going forward, then this is going to cause these scores to become much more popular. Now, I'm going to, before I even go further, let me share in the chat. Hi, Beverly, and hi, Rhonda. Thanks for joining. Oh, good. I was going to share because I thought LinkedIn was not going to show comments, and it is. Perfect. Okay, so if you think about it again, this is going to make these scores become much more prevalent. So let's talk a little bit about the credit scores. In 2006, the three major credit scoring agencies, remember there are more than three, but we mostly focus on TransUnion, Equifax, and Experian. They decided to create what is now known as the Vantage score because they wanted to compete with FICO. And for those who know, FICO has 5 components and Vantage has 6 components. So if you're getting scores from maybe a Credit Karma, Credit Sesame, that is more than likely a Vantage 3 score. And if you didn't know, FICO has over 16 FICO scores. So it has over 16 FICO scores to make it even more fun, right? So we have to be sure we're comparing apples to apples when we look at our credit score. But to go back to the decision that the feds made regarding these credit scores, what it's going to do now, again, 20 years ago, the way we banked, the way we spent money, the way we manage our finances was significantly different from the way we do it today. So if you're unbanked, if you don't have a bank account, if you don't have credit cards, if you don't have a mortgage, and if you don't have maybe auto loan, then you might not be in the credit scoring system. Or if you do, your score is going to be really, really weak. But that doesn't mean you're not making good money, doesn't mean that you're not paying your bills on time. It's just that you don't have those components that the FICO model was looking for and the Vantage model was looking for. So this is going to open the way for the underserved, the unbanked, especially people of color, minorities, mostly Hispanic. The report says 16% possibly of Hispanics and Blacks will possibly be more, will have more access to mortgages. Because these scores, what the difference is these scores are going to include utility payments. They're going to include credit cards, not credit cards, utility payments. They're going to include telephone payments that you make on your telephone, and they're going to include rent payments. Because if you think about it, if I make, let's say I make $50,000, I don't have a mortgage, I don't have credit cards, I don't have an auto loan. Right there, I am like pushed out of the FICO model, the classic FICO model. But if I'm paying my rent on time, if I am paying all my utility bills on time, I am doing well financially. I'm taking care of my bills. But the FICO model does not take those things into consideration. These new models are going to do that. It's going to take into consideration the fact that you are taking care of business, you're paying your bills, you're doing what you need to do. Because this is long overdue. And this came about partly because the Senate, I think it was in 2015 or 2017, they passed a law or statute or whatever it is called, requiring that there be a change to the FICO model to reflect the way we do business today. So for those people who don't have the credit cards and the auto loan and the mortgages, you have a chance now to show by your good paying history on these other components that you can manage your debt. So a couple of things to note. This is going to take a while. It's not something that's going to be instantaneous. It's going to take a while to become effective. Another change is that where in the past, if you went for apply for a mortgage, lenders were required to show 3 credit scores from all 3 agencies. Now, lenders are only required to show 2. They're going to be required to only show 2 credit reports and credit scores instead of all 3. The other change is that lenders are going to be required to show both FICO 10T and Vantage Score 4 credit scores. Every loan they sell to Fannie Mae and Freddie Mac, those 2 scores are going to be required with those loans. So I think that's going to give people a fair chance. For those who are not part of the standard banking system, I think it's going to give them a fair chance to getting a mortgage, because it's not that they're deadbeats. It's just that they don't have those components that FICO and Vantage require. These new credit score models will have these new components. So for those who may not know, FICO has 5 components. 35% is on-time payments. And let me say, the main difference between FICO and Vantage is the way things are weighted. There's not a huge difference in terms of what they require. It's just the way they break it down and weigh the different things on these scores. So FICO has 5 components: on-time payments, 35%, utilization, 30%, history, credit history, how long have you established credit, 15%, inquiries, 10%, and what's the other one? Credit mix, 10%. For Vantage, it has 6 components. Payment history is 40%. Remember, for FICO, that was 35%. So it's just weighting. the thing differently. So I think this is good because with delivering both the FICO 10T and the Vantage score, you can see, okay, we are aware that they're weighted differently. So let's see what the variances are in the scores, and we can account for those variances based on what's on the credit reports, right? So this is a good thing, I think. Let me see, are there any questions? Oh, Rhonda, you are very welcome. This is my passion. I love to educate. I love to share personal finance things. I love to educate because we perish for lack of knowledge. And so this is my thing. I just love to educate people so that they can make decisions that best benefit their pocketbooks. Okay, so are there any questions? Beverly, thank you so much for joining and supporting as usual. Thank you so much. Any questions? Does anyone have any questions? I'm looking here. I don't see any questions. All right, so again, I'll just do a quick recap. The new credit score will include things like rent payments. It will include things like utility payments and telecom payments. And that's going to help those people who don't have the standard, auto loan, mortgages, all that thing, all those things that the classic FICO required. So if you know somebody who's looking to maybe take out a mortgage and you know that they are not in the standard system, you might want to share this information with them to let them know that you may have a chance. Well, although it's not going to happen right now. With like anything else with bureaucracy, it's going to take a while before it's fully established and before all the lenders start using it, because they're going to have to use it again, because Fannie Mae and Freddie Mac guarantee most of the loans in the U.S. And if they want to sell those loans to Fannie Mae and Freddie Mac, then they're going to have to follow the dictates of Fannie Mae and Freddie Mac. So thank you for those of you who have joined me today. If you have any questions and you didn't get a chance to ask them here, please send me an email, or you can post under the live after it's over, either on Facebook. I'm doing this simultaneously to my Facebook business page, my YouTube channel, and LinkedIn. So you can post questions under any of those, or you can send me an email to, if I can find my email address here. Okay, I guess I don't have it here. You can go to my website and send me some information, questions there, and any other question you want to talk about related to personal finance. And if there is something you want me to talk about at the next live or a pre-recorded video, please shoot me an email by going to my website and sending me information via my contact form, and I will put something together and address it for you. Thank you so much for joining me on the Dr. Seb Talks Money podcast and YouTube channel.